Alright, I'm going to show y'all the 10,000 point quarter levels. It's also 1,000 pips. And then that's from here to here. And then I'm going to show y'all the 1,000 point levels or 100 pips, and that's from here to here. So this is supposed to be orange, but this is an awful, pretty bad old school replication of an old school app. The colors are terrible. All right, so let me. So what we're looking at here is 40,000 here, 30,000, 20,000, right? So then in between the 20,000 and the 30,000 is the 25,000, right? 1.25 thousand. And then in between these two, that's so this is your half level right here, which would be this. And right here we have 2,500 level. So we got the 10,000 level, the 5,000 level, and the 2,500 level. This is your actual quarter level. This is your half quarter. This is your whole quarter up here. And you see how price, isn't it interesting? It comes up here, you know, it kind of gets above it, but then it reacts, right? It kind of rejects off of that level up there. Comes back down, boom. It hits this next whole level. Gets below, comes back up, tests, then boom. It hits this next whole level. Back up to this whole level, boom, back down. Back up to this whole level, boom, back up to this whole level. And then boom, back down to here. And then now we're on the way down, which is why I'm selling. Let's zoom in. You know, I could be just really early because we're not even at the. So that's the 10,000. So let's just zoom in. Smaller time frame. Because what I'm thinking is maybe it comes up here and then goes down, right? But let's go back to the here. All right, so what I'm thinking is maybe we'll come up here, reject off of this. This is your 1,000 point level or 100 pip from here to here. That is this here to here. Okay. Yes, it's a demo account. This is the actual live market. Yeah, so, and you can look at price action bouncing off these smaller levels, right? Coming up here, boom, rejecting off of there, coming down here, getting underneath, boom, hits this level, comes back up, boom, hits that, doesn't quite come all the way down, boom, back up, explodes through, all the way up to here, back down, boom, working its way up, boom, finally hits this level after a long time. But the point, is basically, let's say you'd have bought here or here. Well, you would have been in pretty bad drawdown. So that's what you have to be careful about. So you just have to zoom in on that and look at what's going on. But anyway, eventually it worked its way up. And you had looks like almost like a double top here. Boom. Looks like it's going back. Maybe no. Okay. Now, test this level. It's 500, 5,000 level. Major. That's a 10,000. That's a half quarter. That's a 5,000 level. Okay. So we can call that a 5,000 level on the 10,000 point scale. Okay. So, but you can see what happened. Boom, boom. Okay, boom, back up. Now, we didn't make it. We didn't make it up to here. So, we don't really know what's going to happen, but I don't know. I think it's going to go down to here. And here's this Fibonacci. So I've got the Fibonacci set up from here to here. So I think it could basically reject off of this, come down, boom, come down into this area, and then back on up to a higher high above here. Maybe coming up to we don't really know exactly where, but possibly up here maybe. But it's important to have these major levels marked out so that you can track the movement of what's going on. Yeah, so that's what I want to show. And we can see kind of the monthly here. Big wick there. Comes down. Big bearish candle here. Keeps going. Huge wick right here. Look at that. Boom. After that wick, it came back down and it went up. Basically, 20,000 points. That is maybe we'll see a pennant pattern, like a flag pattern to push up. But if this engulfs, that's what we got to see what happens. But back to the weekly, back to the monthly. So we didn't really get an engulfing here or anything, but it is like a tweezer top. That's what they call that, a tweezer top. And so that's, you know, slightly like a, maybe a, what do they call that, a hanging man, I think, maybe. I gotta brush up on my candlesticks, but so I definitely think it's going back up eventually. Like I said, I think it's going down first and then up. Down, down, right here, and then up. That's what I think. So let's see what's going on. But don't, no need to go any smaller than these quarter levels. You see I have these levels here. These are nothing to do with quarter levels. It's almost too much, really, like, but you see how it reacts. So I'm just dividing these small 1,000 right here, 1,000 point levels, 100 pips. I'm just dividing the quarter in half. See, might seem confusing, but it's so basically. Let's see, this 25 here, 26 here, and then 24 here. So the reason that this is orange is because this, on the high 10,000 level, it's this orange, right? So that takes priority. The high time frame takes priority. So that's why this is not red. Okay, but if we were not using the 10,000 time frame, quarter level, high time frame quarter levels, then this would just be red, right? So you can see it's 1,000 points in between here and here. So, you know, we'd be looking, if it rejects off here, it'd come down to test right here. But the Fibonacci, you have to remember, Fibonacci is not even till down here. So you'd be talking 2,000 points down, potentially. Depending on, you know, what happens. I don't know if we got any news coming up. It's a holiday all this week in U.S. Memorial Day, and then bank holiday. Thursday, Friday. Today's Thursday, so tomorrow's Friday. So, but we got non-farm payrolls. So we'll have to see what kind of reaction. Plus, we have unemployment rate, ISM, manufacturing. So let's look at these. So basically, non-farm expectations lower. So this is a weaker than forecast. It's usually negative or bearish for the USD, okay, which would be bullish for the GBP USD pair, the GBP USD pair. So, okay, now look at this now. Okay, we want to actually, I'm trying to look for another sell here. So we're going to have to see what happens here. But anyways, yeah, so this should be bullish if it goes the way that it's saying, which it probably will not. I think there's some tomfoolery going on with fundamental news as I've been observing it for basically about a year. Okay, unemployment rate expected to be lower. So this should be positive bullish for the USD, which should be negative or bearish for the Great British Pound, US dollar right here. So this is how we look at fundamental news. Okay, of course you can read news articles and look it up and all that. But Institute of Supply Management, Non-Manufacturing Purchasing Managers Index. So ISM PMI lower, expected lower. Okay, weaker. So that's supposed to be bearish, which would be bullish for the pound dollar. It would be bullish for the pound dollar. So what we have is bullish. We're talking for the pound dollar. We got bullish. Okay. We've got bearish for the pound dollar. And we've got bullish. So we have two pieces of bullish news potentially. One piece of bearish news potentially. So what I want to do is save this. And I want to go into multi. Yeah, I mean everything's kind of overbought right now. So I mean it, but you know, also too, when these stochastics are up high like this, that could also mean that the market is strong, right? So you have to notice there's been an uptrend here for since May 13th, or really since May 16th. Okay, through the rest of May, and then we're basically, so you know, maybe we're, let me check something I want to see. So I've mostly been doing a lot of, okay, this is buy-in. I made a good little bit of money there. This is demo account. So I'm making, looks like I'm making most of my money buy-in. Let's see if I made any money on my sells. Sells. So, yeah, a little bit. Most of it was buy-in though. So that's but like I said, it's they're sort of, it's a little bit overbought right now. Like I said, I'm thinking you know, and also notice it's a little bit of a head and shoulders type of situation. Look at this. See that? So in this situation, it'll be a long time before we get down here, but you know, and that's so close to this Fibonacci level. That's the thing. So by the time that breaks, um, that move would almost be done with, you know. So then we have yeah, and this is interesting too. You know, basically it broke through this trend line. Boom. And now what's going to happen basically? So we're looking to see now something interesting here. Um, price is from what I learned about this. I don't know all the technical jargon, but there's a gap here, you know, and that's what I know. And I know that price is going to have to come down and fill that. And my whole thing is it's going to be right on this trend line, right? So we're going to have to watch. Plus, it's going to be right on this really, really, really important level, the 25,000 level, right? So, but then we have to look at this Fibonacci, right? So are we going to see it get down below here and then take off? You know what I mean? Because you got all this buy-in right here. You had buy-in over here. You know, it went up okay distance, but for the heavy hitters, maybe that's not that far. You know what I mean? Because they're looking something like this. They're looking a big move. They're kind of playing on this probably. I guess I don't really know for sure, but you have to think they're probably playing on this higher time frame. You know, they're probably playing on this. On this 10,000 level, you know, where the big dogs play. It's definitely fascinating, for sure. So. Boy, was Microsoft Paint wasn't this abysmal, right? You don't even have a where's the picker? So bad. Well, I just want to show y'all my website, but I want to show you something on it. It's got a lot of good stuff. I need to update that image there. I'll do that in a minute. And I just added that image. That is like a breakdown of the market. You got central banks, major banks, commercial companies, investment funds. You got large speculator, commercial company, ECN brokers, market makers, right? And you got retail traders on the periphery. Oh, hold on. I'm on the wrong page. I'm trying to show y'all some. Yeah, I want to show y'all this. I made this a while back. But this is going to help you understand how candlesticks move. This is the price action, how the price action would be. You got the open, low, high, close. Open, high, low, close, right? So it goes open, high, paint it red on the way down, low, close, right? Just like this is open, low, paint it green on the way up, high, close, right? And so that is going to help you to understand how these candlesticks are formed, so that when you're watching on here, for example, like this one here, it opened here, it had a low, and then it went up, and the high was the same basically as the close. If we zoom in on this area, to the left and right of this candlestick, if it'll let me. I don't think it will let me. That's be about as good. So we're concentrated on this. Oh, you know what we can do? Watch. Oh, bleh. We're concentrated on this area. Watch. So we'll zoom in. Remember what we said? We said it was open, low, high, and closer right up there. So let's see. So we have the open, low. Let's see where the time of it. So 1600. Oh, you know what you gotta do? We gotta mark. We need to mark. Well, I want to mark this open actually, so we can see where that is. So the open is right here. Open, low, high, close. It painted green on the way up. So open, low, painted green on the way up, and then the high and the close are right up there together. So now you see this candlestick. That's how that candlestick was formed. If we zoom out to a further away here, Okay, we can see the open was right around here somewheres. I think it was right here. Open, low, painted green on the way up, and the high and the close are up here. So that's how that candlestick was formed that we're looking at right here. And we can go all the way out to the 5-minute. We can see so the open was right around here somewheres, and then low, painted green on the way up, high and the close are up there, and that's that candlestick right there, right here. What did I draw this for? Does anybody remember? Yeah, also keep in mind we have this daily equidistant channel that goes all the way back to February 22nd, 2022 to 222, which had a retest basically on 323, 414, 420, or 421, whatever. And then now we just had a retest Thursday, I guess, last Thursday or something, on the last week basically. $5.30. Monday, Memorial Day. Yeah, so, and that lines up with, this. Now here's something about an equidistant channel that is taught in the classic textbook, Technical Analysis of Financial Markets. This equidistant channel right here, which actually that should be thicker. What? We got to make this a little bit thicker. Whatever, it's a little bit too thick, but who cares? So right now, what we can know, or what we can, what's taught in the classic text, Technical Analysis of Financial Market, keep in mind we have this Fibonacci here. We're at the high here, but so let's say it did react off of this 50 level of the Fibonacci, or the 61.8, and then it exploded up. Well, that's in line with the teaching that says that in an equidistant channel, if the price does not come down and touch, basically, if it turns around before coming to the bottom of the channel, then that is a sign that it might explode up through the top of the channel. That's an indication of a momentum shift and that. So could be a sign of a longer term uptrend shift. We have to keep in mind what's going on the DXY. So we do have a bearish structure here. We've got lower lows, lower highs. So it is kind of looking good that we might well do like I said and then go up. So that's going to be the video for right now. Thanks for watching, and yeah, please like, comment, subscribe, click the bell notification for updates, and thanks so much for watching.